Hey, good morning, folks. In this video, we're going to take a quick look at gold and silver and what they are currently up to. This is the first time I've recorded with the camera on, so hi, that's me. Let's jump into the charts. This is gold in the monthly time frame, and I wanted to review my premise for precious metals. This weekend, I started with a clean chart, took a fresh look. Here we have, this is the end of the bear market back in December of 2015. We got up to 19 and change, and then, grueling couple of years of downtrend, several years, four plus years of downtrend. Then we got this breakout in December of 2015, got a sharp rally, and then moved into a sideways trading range for 4 years or so. And then we got this breakout in June of 19. And so none of that has changed. I'm still good with that. Big rally up to new all-time high. And of course, that's important to recognize that gold made a new all-time high at this point. Big pullback, although if we looked at a Fibonacci retracement, that looks like a 38% retracement, just eyeballing it. And now we're kind of in a, sideways range, triangle, whatever you want to call that. Regardless of what you call this pattern, it is a continuation pattern, meaning that price is consolidating, and the expectation based on probability is that price, once it's finished with this consolidation, price is going to head higher. This is a shift pitchfork that we're looking at, and I believe it is a valid pitchfork based on price hitting the median line. That's exactly what Dr. Andrews told us that a valid pitchfork would do, is that price would come up and hit that median line about 70%, actually over 70% of the time. And so that's exactly what we've got going on here. Makes me believe that this is a valid pitchfork. If we look at the price action along the bottom of this fork's a little bit sloppy. You can see how price is, it's following that bottom median line, but it's not stopping there as support. And so what Dr. Morge, Timothy Morge, as how to use Andrew's pitchfork, is that you draw, he called them sliding parallels. So basically you draw a line that is parallel to one of the median lines of the fork, and then you can slide it around. Sliding parallel makes sense. And so what we do, we throw that sliding parallel down there at our low. We can see that it looks like price is finding support there. We could actually push, because after that one poke to the bottom, price is actually finding support along there. And so you can see the value of a sliding parallel. It shows us that, clearly price is treating that as a support level. Now, if we were wild-eyed traders and we wanted to trade gold in this time frame, we could do something like that. We could do something like that and use that lower sliding parallel as our stop out level. That, if price dropped below that level, we've invalidated this pattern, and we probably ought to step to the sidelines and reevaluate our premise. And that's one of the ways we could use sliding parallels. So I'm okay with this price action. That doesn't feel great right now, but I'm okay with this price action. And I don't see anything that invalidates my belief that gold and silver are in secular bull markets that have multiple years left to run, multiple years, four to 8 years at least. Seriously, secular bull market. Look that up if you're unclear on secular versus secular. This is a secular bull market in the precious metals, in my opinion. MACD is in bull mode, suggesting that the primary trend is upward. Stochastics, which I use as an indication of energy level, is mid-range. So there is energy in gold. Investors definitely have not lost interest in gold. And actually, if you look at premiums in the physical markets, investors are buying physical precious metals, folks. And so if you're not out there with them buying physical precious metals, you might give some thought to doing so. So anyway, this is gold in the weekly time frame. And we can see that price has pulled back to, this should be the 40-week moving average, and appears to have found support there. Obviously, this week is not over yet, so we'll see where we get with that. MACD on a sell signal, but again, in bull mode. Primary trend is up, stochastics down in the tanker. We drop down to the daily time frame. This hadn't felt good. So hadn't felt good watching gold for the last little bit. Here again, we see that, price currently is finding support on the 200-day moving average, has dropped below this is the first median line extension of this shift pitchfork. Price has dropped below that level, currently finding support, obviously, 200-day moving average. This was a potential support level, obviously it caught price here, but obviously didn't catch price here. So, and it wasn't a strong support resistance level to begin with. We can see it acting as resistance here, breakthrough, and then we did get a test of this level as support right there, and then price went off to its new all-time high. That's a support level that didn't hold for us. MACD is down in bear mode. In the daily time frame based on MACD, the primary trend is still down. Albeit this is a good place. This would be a good place for this price trend to reverse to the upside. We're at a support level. MACD has reached an oversold. If we go back and look at one of the ways I use MACD is to look for overbought and oversold levels. And so if we go down, let me expand this. You can see what I'm talking about. If we go back down to a prior low, we can see that, MACD reached that level of oversoldness in MACD, and then price rallied from there. We're at that level again, but MACD doesn't really look like it's bottoming yet. And so maybe we've got to go down to this level of oversoldness in MACD before we find an actual bottom. And we'll see what price wants to do for us there. Let's keep rolling. Silver in the monthly time frame. I'm watching this pattern to see whether it is still valid. Based on this pattern, I'm still expecting an upside run to 39.88 based on this impulsive price movement. Currently, this is a sideways range, flag, pennant, whatever you want to call it. It's a continuation pattern. And so at this point, silver is still in a primary uptrend, certainly in the monthly time frame. We can see MACD is in bull mode on a sell signal, but in bull mode. Energy down in the tank. If we drop down to the weekly time frame, we see currently price is finding support at the bottom of this support resistance zone, which, looks good. This is a potential place for silver to reverse to the upside. We got a big gap below us, folks. If price does drop below this support level, 19 is the next. So, we got a $2, $2.50, $2.50 drop if this level of support doesn't hold. MACD, close to dropping back down into bear mode, clearly on a sell signal, energy in the tank. We have to remember as silver investors that silver is always more volatile than gold. This is silver in the daily time frame, and obviously we've had this big push to the downside. Clearly that has not felt good. Hadn't felt good to be in silver for the last few weeks here. Price has pushed below this support resistance level. Yeah, currently we don't really have any support until we get down to this. It's that 19 level again. Silver not looking good in the daily time frame. MACD in bear mode on a sell signal. One of the points I'd like to make about silver, folks, is that we look at the spot price of silver, and so here we see it's 21.74. It's like, ooh, big sale on silver, let me go buy some. Well, and then I go out to APMEX and I see here's Philharmonics, that's an ounce of silver, and they want 27.31. And actually, to get that price, I got to buy 500 of them. So I got to buy 500 ounces to get that price. If I only want onesies, it's 28.31. And so one of the challenges we have as investors is that, we really want to go out and buy physical silver, but we look at the spot price, and then we look at the physical price and we say, well, I'm not going to pay $6 premium I'm not going to pay a $6 premium for silver. Well, fine, don't buy silver. You won't have any. But I don't look at it that way. See, I track the spot price because I'm a technical analyst. I look at the spot price. That's what I can chart. As an investor, when I want to buy physical silver, this is the price of silver. The price of silver to me is what it cost me to go to my local coin shop and walk out the front door that day with physical metal in my hot little hands. That's the price of physical metal. The spot price, it's interesting. It gives us something to analyze as technical analysts and investors. That's the real price of silver. Another point about the precious metals, here's an American Eagle, American Silver Eagle. It is on a onesie price, $38.01. So $38 for an American Eagle, $28 for a Philharmonic. Now, why anybody would pay $10? So here you're going to pay a $6 premium over spot. That's a $16 premium. Actually, it's 15 and change, but nearly a $16 premium over spot. I wouldn't do that, folks. I'm not buying American Eagles. When I go buy physical silver, I'm buying what's cheap. $6 premium over spot is not cheap, but that's the indication of where we're at in the physical market. The physical market is tight. That's why premiums are elevated. Investors are buying physical silver and taking possession of it. And so supply versus demand is outstripping supply, and that's why premiums are elevated. Not only are premiums elevated today, they have been elevated for the last 12 months or more. Physical silver and physical gold have been tight for the last 12 months. And again, if you're into gold and silver and you don't have any physical, go get some. That's just me. So this was just as curious, where is the ratio at currently? Because obviously silver has been beat up more than gold in the last couple of weeks. And we can see that here in the ratio chart, silver spiking up to where, this is the silver cheap relative to gold. So if you are trying to decide which metal do I invest in today, based on the ratio, silver is the metal of choice. One of the indications that I will be watching for when does this secular bull market end is this ratio. And I believe that we will get back down to this 15-to-1 ratio, silver to gold. And that could be a marker of the end of the secular bull market. I suspect that we'll get at least down to lower levels, maybe as low as 8. I don't want to go into it on this video. There's a number of reasons why I say that. But anyway, when this ratio gets back down to this level, I will be looking for other asset classes to move my silver money into. Let's see, the dollar, these are the headwinds. So the precious metals have at least 2 significant headwinds at this point. The US dollar obviously is one of them, tremendously strong. Why is the dollar strong right now? In my opinion, the US dollar is strong right now because it is the least ugly sheep in the field. You're looking out there at the field full of sheep and you're picking the least ugly one. Right now, it's the US dollar. From a chart perspective, again, that's a continuation pattern, flag, pennant, whatever you want to call it. That's a continuation pattern, which suggests that the dollar is headed even higher than it is today, continuing to be a headwind on the precious metals. MACD is very overbought. So obviously this move is overbought. Again, if we look at MACD as an indicator of overbought and oversold, let me move back. We can see this is the last time that the dollar reached this level in MACD, and we're back there again. So not only do we have, that's a potential double top. You can see there, that's a potential double top in the US dollar, and it's occurring at a point where the MACD has reached an extremely overbought level. And so it wouldn't be surprising to me to see a pullback in the dollar at this point. So maybe some strength. A pullback in the dollar would help silver and gold put bottoms in and reverse to the upside. I suspect that this is not the end of strength in the US dollar, that the dollar will continue higher, but what do I know? This is the other headwind that gold is facing. Let me get my picture out of the way here, folks. This is the yield on the 1-year Treasury bill. Clearly, interest rates are heading higher, and it's not the Fed moving those rates higher. It's nature, investors, however you want to look at it. Interest rates are moving higher. The point I wanted to make on this chart is that don't know what's going on with interest rates, but I can look at this chart and I can see when interest rates are moving vertically, good things are not happening in the economy. I mean, look, there's a vertical move. That was 2008. There's a vertical move. That was the big scary plunge. Big vertical move. Don't know exactly what's causing it, but I do know that based on this chart, I'm concerned. When I see interest rates moving vertically like this, it gives me pause for thought. It's like, okay, maybe I ought to back up and try to figure out what's going on here. So anyway, folks, that's enough of my rambling this morning. I'm going to wrap this up and I will talk to you soon. Have a great day.